Welcome to the series Should I Invest or Not? This time it's about Pepsi Co. And if you haven't, please subscribe to our channel and give us a like so we can continue making more investing videos for you. We will, in this video, give you a complete, transparent review about Pepsi Co. so you have all the knowledge you need before you make a decision about investing or not in this company. It's important that you stick to the end of the video so you get all the information you need before you start investing in Pepsi Co. Pepsi Co is a global food and beverage company that produces and distributes a wide range of products, including soft drinks, snacks, juices, and sports drinks. The company was formed in 1965 through the merger of Pepsi Cola and Frito-Lay, and has since expanded its product offerings through acquisitions and strategic partnerships. In this stock analysis, we'll evaluate Pepsi Co's financial performance, business strategy, and competitive position to assess its investment potential. You'll need to understand the story about Pepsi before we dive into the financial part. The story of Pepsi Co begins with the creation of two separate companies, Pepsi Cola and Frito-Lay, in the early 20th century. Pepsi Cola was founded in 1898 by Caleb Bradham, a pharmacist from North Carolina who created a new soda drink to help aid digestion. The drink became popular, and the Pepsi Cola Company was born. Frito-Lay, on the other hand, was founded in 1932 by Charles Elmer Doolin, who had discovered a new snack food called corn chips, which he marketed under the name Fritos. In 1965, Pepsi Cola and Frito-Lay merged to form Pepsi Co, with the aim of creating a broader product portfolio and expanding their global reach. The merger was seen as a way for Pepsi Co to compete more effectively against its main rival, the Coca-Cola Company. At the time of the merger, Pepsi Cola was primarily known for its soft drinks, while Frito-Lay was known for its snack products, such as Lay's potato chips and Cheetos. In the years following the merger, Pepsi Co expanded its product offerings through a series of acquisitions and partnerships. In 1977, the company acquired Pizza Hut, which became part of its restaurant division. In 1986, Pepsi Co acquired KFC, which was followed by the purchase of Taco Bell in 1995. These acquisitions gave Pepsi Co a strong presence in the fast food industry, with a portfolio of popular brands that also included Pepsi Co's own beverage offerings. In addition to its restaurant business, Pepsi Co continued to expand its product offerings in the food and beverage industry. In 1998, the company acquired Tropicana, a leading producer of fruit juices and beverages. In 2001, Pepsi Co acquired Quaker Oats Company, which included the popular brands Quaker Oats, Gatorade, and Aunt Jemima. This acquisition gave Pepsi Co a strong position in the breakfast food and sports drink markets. In recent years, Pepsi Co has continued to evolve its business strategy to meet changing consumer preferences and trends. The company has introduced new products, such as energy drinks and plant-based snacks, and has focused on expanding its e-commerce capabilities and digital marketing efforts. Pepsi Co has also made a commitment to sustainability, launching initiatives to reduce plastic waste and increase recycling, as well as setting targets to reduce its greenhouse gas emissions. Today, Pepsi Co is a global food and beverage company with a portfolio of leading brands, including Pepsi, Fritos, Lay's, Tropicana, Gatorade, and Quaker Oats. The company operates in over 200 countries and has over 290,000 employees worldwide. Despite challenges posed by the COVID-19 pandemic, Pepsi Co has continued to grow its revenue and profitability and remains well-positioned for future success. Pepsi Co's financial performance has been strong in recent years, with steady revenue growth and solid profitability. The company's revenue grew by 8.8% to $70.4 billion in 2020, up from $64.7 billion in 2019. The growth was driven by strong sales in the company's Frito-Lay North America and Quaker Foods North America segments, which benefited from increased demand for snacks and breakfast foods during the COVID-19 pandemic. The company's beverage segment, however, faced some headwinds due to the closure of restaurants and other food service channels. Pepsi Co's net income also increased in 2020, rising 4.8% to $7.1 billion, up from $6.8 billion in 2019. The company's operating margin, however, declined slightly from 16.4% in 2019 to 15.9% in 2020 due to higher costs associated with the pandemic, including increased marketing and supply chain expenses. Looking ahead, Pepsi Co has set ambitious targets for growth, including a goal of achieving $100 billion in revenue by 2025. The company plans to achieve this through a combination of organic growth, acquisitions, and partnerships. Pepsi Co has a strong balance sheet with a debt-to-equity ratio of 2.18 and a current ratio of 1.34, indicating that the company has sufficient liquidity to finance its growth plans. Pepsi Co's business strategy is focused on innovation, sustainability, and customer centricity. The company invests heavily in research and development to develop new products and improve existing ones. In recent years, Pepsi Co has introduced a number of new products, including energy drinks, functional beverages, and plant-based snacks, in response to changing consumer preferences and trends. The company is also committed to sustainability and has a set number of environmental targets, including reducing its greenhouse gas emissions by 40% by 2030 and sourcing 100% renewable electricity. Pepsi Co has also launched a number of initiatives to reduce plastic waste and increase recycling, including a partnership with the Recycling Partnership and a new line of snack packaging made from recycled plastic. Pepsi Co's customer-centric approach is reflected in its focus on meeting the changing needs of consumers, including offering healthier snacks and beverages, expanding its e-commerce capabilities, and enhancing its digital marketing efforts. The company has also invested in data analytics and artificial intelligence to better understand and engage with its customers. Pepsi Co operates in a highly competitive industry, with competitors such as Coca-Cola, Nestle, and Kellogg's. The company's strong brand portfolio, however, gives it a competitive advantage, as it's able to leverage the popularity of its brands, such as Pepsi, Lay's, and Gatorade, to introduce new products and expand into new markets. Pepsi Co's strong distribution network is also a key advantage, as it allows the company to reach customers in a wide range of geographies and channels. The company has invested heavily in its supply chain and logistics capabilities, including launching a new automated warehouse system and expanding its direct-to-consumer capabilities. In addition, Pepsi Co's strong financial position and ability to invest in innovation and marketing give it a competitive edge. The company's robust research and development program allows it to stay ahead of competitors by introducing new products that meet evolving consumer demands. Pepsi Co has also made strategic acquisitions, such as its recent purchase of Rockstar Energy, to expand its presence in the energy drink market and diversify its product offerings. Another key advantage for Pepsi Co is its strong international presence, with operations in over 200 countries. The company's global footprint provides a diversified revenue stream and allows it to capitalize on growth opportunities in emerging markets. Pepsi Co has also made strategic investments in China, the world's largest consumer market, with plans to expand its presence in the country through partnerships and new product launches. And before we end the video, here are 10 quick pros and cons for the Pepsi stock. Pros: strong brand portfolio. Pepsi Co has a diversified portfolio of leading brands that are well-known and trusted by consumers around the world. This includes Pepsi, Fritos, Lay's, Tropicana, Gatorade, and Quaker Oats, among others. This brand strength provides a competitive advantage and helps to drive revenue and profitability. Diversified revenue stream. Pepsi Co operates in multiple segments, including beverages, snacks, and restaurants, which provides a diversified revenue stream. This reduces the company's reliance on any one product or market and helps to mitigate risks associated with changes in consumer preferences or economic conditions. Strong financial performance. Pepsi Co has a track record of strong financial performance, with consistent revenue growth and profitability. The company has also been able to maintain a strong balance sheet with low debt levels and a solid credit rating, which provides financial flexibility for future growth opportunities. Innovative business strategy. Pepsi Co has a strong focus on innovation and has a robust research and development program that allows it to stay ahead of competitors by introducing new products that meet evolving consumer demands. The company has also made strategic acquisitions to expand its presence in new markets and diversify its product offerings. Sustainability focus. Pepsi Co has made a commitment to sustainability, with initiatives to reduce plastic waste, increase recycling, and reduce greenhouse gas emissions. This focus on sustainability can be attractive to investors who prioritize environmental, social, and governance (ESG) factors in their investment decisions. Cons. Competitive market. The food and beverage industry is highly competitive, with many established players and new entrants vying for market share. Pepsi Co faces intense competition from rivals such as Coca-Cola, Nestle, and Mondelez International, among others. Changing consumer preferences. Consumer preferences and trends can be fickle, and Pepsi Co's success is dependent on its ability to adapt to these changes. Shifts in consumer preferences toward healthier options or plant-based products, for example, could impact the demand for some of Pepsi Co's products. Regulatory risks. The food and beverage industry is subject to various regulations, including health and safety standards, marketing and labeling rules, and taxes. Changes in these regulations, or the introduction of new regulations, could have a negative impact on Pepsi Co's business. Exposure to commodity prices. Pepsi Co's products are made from commodities such as corn, potatoes, and sugar, which are subject to price fluctuations based on supply and demand. Increases in commodity prices could lead to higher production costs, which could impact profitability. Global economic conditions. Pepsi Co operates in over 200 countries and is therefore exposed to global economic conditions, such as changes in currency exchange rates, political instability, and economic downturns. These factors could impact the company's revenue and profitability. Overall, Pepsi Co's strong financial performance, innovative business strategy, and competitive advantages make it an attractive investment opportunity. The company's focus on sustainability, customer centricity, and international growth also positions it well for long-term success in a rapidly evolving industry. However, like any investment, there are risks to consider, including changing consumer preferences, regulatory changes, and the potential impact of global economic conditions. Investors should conduct thorough research and analysis before making any investment decisions. We really hope you liked the video. If there's anything we can do better, please leave a comment and tell us. Otherwise, hit the like and subscribe button, and we'll see you in the next investing video. Have a great day.